önce evet, kayıt mesajını gördünüz şu anda ve duydunuz. Programımıza başlamadan önce webinar boyunca devam edecek simultane tercüme sistemimizle ilgili çok kısa bir iki bilgi sizlere aktarmak istiyorum. Teknik destek ekibimiz bir ekran paylaşıyor olacak şimdi sizinle. Teknik masamızdan ekran paylaşımı gelecek mi acaba? Şöyle yapalım. En altta Zoom ekranının altında bir İngilizce veya Türkçe olarak seçmeniz için ekranın altında bir küre simgesi göreceksiniz. Bu simgeyi tıklamanız gerekmekte. Ardından tercih ettiğiniz dili buradan çıkan seçenekler üzerinden İngilizce veya Türkçe olarak belirleyebilirsiniz. Evet, şimdi ekranımıza geldi. Hemen Zoom ekranımızın alt kısmında bir küre var. Orada küre simgesine tıkladığınız zaman seçmek istediğiniz dil seçeneğini buradan belirleyebiliyorsunuz. Evet, çok teşekkür ediyoruz teknik ekibimize de. Ben tekrar hoş geldiniz diyerek programımıza başlamak istiyorum. Öncelikle kendimi tanıtmak isterim. İsmim Didem İzgi, Frankfurt School kıdemli pazarlama ve iletişim uzmanıyım. Avrupa İmar ve Kalkınma Bankası, Avrupa Birliği ve Türkiye Cumhuriyeti tarafından finanse edilen Kadın İşletmelerine Finansman ve Danışmanlık Desteği Programı çerçevesinde düzenlenen Fintech Uygulamaları ve Kadın İşletmelerine Yönelik Çözümler başlıklı webinarımız için bugün burada bir arada bulunuyoruz. Değerli misafirlerimiz, webinar sunumumuza geçmeden önce kadın işletmelerinin finansmandan danışmanlık desteğine bir sonraki adımı atmak için ihtiyaçları olan beceri, bilgi ve kaynakları elde etmelerine yardımcı olmak amacıyla hayata geçen programımız hakkında kısaca bilgi vermek isterim. Avrupa İmar ve Kalkınma Bankası tarafından hayata geçirilen programın ana hedef kitlesi, kadınların ortak veya sahibi olduğu veya yönetiminde söz sahibi olduğu küçük ve orta ölçekli işletmeler olarak tanımlanabilir. Kosova'dan Kazakistan'a 21'i aşkın ülkede uygulanmakta olan böyle kapsamlı bir programın hayata geçirilmesi tabii ki ancak birçok paydaşla mümkün. Avrupa İmar ve Kalkınma Bankası, Türkiye'de Avrupa Birliği, Türkiye Cumhuriyeti, Hazine ve Maliye Bakanlığı ve Kredi Garanti Fonu ile işbirliği içinde programı yürütmektedir. Frankfurt School olarak da teknik danışmanlığını sağladığımız programın 2014 yılında başlayan ilk fazının başarısının arkasından hayata geçen ikinci fazı da 2022 yılı sonuna kadar halihazırda devam edecektir. Program kapsamında kadın işletmelerine iki ana başlıkta destek verilmekte. İlki, yerel bankalara sağlanan kredi fonları aracılığıyla finansman temin etme imkanı. Bu kapsamda 3 değerli bankamız, Akbank, Denizbank ve Yapı Kredi programımızın katılımcı bankaları olarak destek vermekteler. Diğeri ise danışmanlık. İşletmelerinin gelişip büyümelerine ve katkı sağlamak amacıyla Türkiye genelinde verilen danışmanlık hizmetleri bunlar. En az 2 yıldır faaliyette olan ve kurulu bir işletmeye sahip kadın girişimciler eğitim, mentorluk ve farklı alanlarda destek alabiliyorlar bu kapsamda. Mentorluk hizmetiyle de kadın işletme sahipleri, bilgi birikimi ve deneyimlerden faydalanmak için profesyonel iş kadınları ile 6 aylık gruplar halinde bir araya getirilip gelişimlerini ve zorlukları aşmalarına yardımcı olmak amacıyla bu mentorluk programlarına katılabiliyorlar. Gelişim atölyeleri ile de temel liderlik becerilerini geliştirmeleri, işletmelerini ileriye taşıyabilecek yenilikçi uygulamaları öğrenmeleri için yöntemler gösterilmekte. Program hakkında detaylı bilgilere ve katılımcı bankalarımızın ürünlerine yönelik linklere de kadınişletme.com adresinden ulaşmanız mümkün. Evet, şimdi bugün sizlerle birlikte dinleyeceğimiz başarılı fintech uygulamalarının dünya örnekleriyle paylaşılacağı ve kadın işletmelerine yönelik ürün ve hizmetler için farklı bakış açıları sunmayı hedefleyen sunumumuza geçmek istiyorum. Dünyanın çeşitli ülkelerinde pek çok uluslararası kuruluşla kapsamlı danışmanlık ve teknik destek portföyüne sahip, özellikle fintech işbirliklerinde engin deneyimleri bulunan Frankfurt School Uluslararası Kıdemli Risk Yönetimi uzmanı Dr. Joachim Bald'a sözü bırakmak istiyorum. Efendim, mikrofon sizin, Sayın Bald'a.
Okay, I'm on. Good afternoon, everyone. This is Joachim Bald'a. I'm mildly embarrassed to be the older guy in a suit again, who will be talking about what women want in financial services. But I did speak a bit with the very talented power women at the Turkey Women in Business program beforehand, and all the good ideas that I will be sharing are actually theirs. So here's how we want to structure the presentation today. The ideas around how we can leverage fintech for women in business. We group them into 6 themes, which you see here. And there's a 7th bonus theme, which we'll probably not get to in any detail. So the first one will be time is money. There's never been anybody more busy than women in business, right? Because you have all your normal responsibilities of the business and a lot of household, personal, family issues to take care of. So let's respect women's time, both in terms of the access to financial services, but also in terms of how we deliver any kind of accompanying training and other service for support. The second theme that we set out is all about digital financial ecosystems. This is where mobile money, supply chain and vendor credit, online marketing comes in. And then for women businesses in rural and agricultural contexts, we have a third theme that is about agricultural value chains, contract farming, and capturing more of the value added in what is often a niche, high value agricultural product. And of course, there's fintech that can help you with that. Number 4 is about the financial products themselves and fintech innovations around that, and that will allow us to move beyond the traditional collateral-driven lending. And so this would be leasing, factoring, pay-as-you-go, flexible kind of payment plans that are all light on traditional, particularly real estate collateral, because that is one of the key constraints that we all know for women in business is the traditional collateral focus. And here's the thing, number 5, women-centric credit risk assessments that pick up on a theme that is often misunderstood by guys in suits like me. And they think, oh, we're completely gender blind, right? Just the facts, please, in risk assessment. And that is fair enough, right? But if you don't take gender into account, you're actually already gender biased. That is the reality. And that's what we're talking about in the 5th theme. The 6th and final main theme is the prudential reflex that women bring to business. They're just the better insurance risks, right? They're more forward planning, risk conscious and risk averse. So insurance is a natural product for women. And we just need to offer them cost-efficient solutions for their business to succeed. And then finally, number 7, what about crypto assets and the blockchain, right? Isn't that what fintech is all about? Yeah, 3-4 years ago, absolutely. So in case we don't get to this, because number 7 really is more of a buffer topic if we miraculously have too much time left at the end. So in case we don't get to it, here's the short version about crypto. It's a Ponzi scheme, right? And it will not end well. And the blockchain, the revolutionary blockchain technology, that's really a very small step for mankind. And nobody would be talking about it if you didn't have a friend who has a cousin who somehow got rich quick with Bitcoin. Good. Before we even go into this fintech, that fintech, and what it does, a quick forward on why we are talking about fintech solutions in banking. Right? These two things, banking and fintech, used to be at the very opposite ends of the spectrum. Just 10 years ago, fintech was all about rapid development, very narrowly focused of one problem to be solved, very fast time to market. And I think that's still true of fintech approaches. Well, on the other hand, software and banking, that's where everything has to be super audit trailed, mission critical, heavy metal kind of often legacy, industrial strength, core applications. Okay, all the buzzwords, but they're all about mission critical, national security relevant financial infrastructure. Okay, and fintech is the enemy of that, if you will. But the last 10 years, we've seen a trend to load traditional banking systems with ever more quick solutions for various aspects of the service spectrum. And that requires already that we move beyond all of the little modules that the traditional core banking providers offer, because those are actually rarely very good at what they do, right? So if you take the mobile banking solution from SAP Banking or from Temenos, yeah, it works, but it's not as shiny as that fintech mobile banking solution. So what's been going on is that all the traditional systems in a bank are being integrated through a middleware layer into a data warehouse, which makes a seamless view of client data and internal data much more easy. And this omnichannel then also becomes the single bus, the single API, where you can flexibly plug in externally purchased, procured little fintech apps. So that's the paradigm shift that I'm talking about. Instead of trying to integrate your new digital identification applet into directly the core banking system, you just plug it in at the top here into this middleware layer that you already have in place to integrate all the other legacy applications into a data warehouse. And so this is where this fits in. And that's why it's not crazy to talk about fintech in banking. So here comes a quick poll question exactly on this topic. So we'll splash this on your screen, and we'll come back to this. It's a little bit too long to read out to you, but we'll come back to this in a few minutes. So I don't want to wait any longer to jump right in how we can leverage fintech for women in business. First theme is time is money, right? So women are looking for flexible, time-saving solutions online and mobile that will deliver customized financial services to their needs. And what's relevant there is the entire process chain from the beginning. So let's onboard, let's do the KYC compliance more quickly, where you don't have to sit in the branch for hours and somebody photocopies your passport and all of those things. We can use remote digital account opening and KYC services, of which there are quite a few nowadays. Video ident, ID Now, Oz Forensics. Those are the logos here on the right-hand side. And you will see that throughout the presentation, I clipped a lot of logos from websites, and you're welcome to Google them, look further, look at the product descriptions and samples. So we've used Oz Forensics quite a bit in the institutions that I work in Central Asia, and it's more complicated than you think, right? There was a wave of fraud actually in online lending with the ID certification. There's the possibility that you sign up with the passport, right, or an ID card, and then comes the video identification service, and people just hold the same passport again in front of the camera and move it a little bit, and then the artificial intelligence isn't quite so smart and thinks, okay, well, that's the same person, he's moving, he's alive, so we got a match, when actually it's the same ID card that somebody stole on the bus from you, and now they're opening accounts in your name. So this liveness verification, is this a video of a real person that matches that photo on the passport, or is just somebody shaking the passport a little bit in front of the camera? That is a real problem for fully automated identification services. Good, so that's why you buy it from those specialists like us, forensics or video ident, to do it. A similar thing that is outsourced in that KYC and onboarding process is the integration with various external databases, such as the credit bureau, corporate registers, government ID, the VAT office, and maybe even the property deeds register. That's in the detail kind of complicated, and you want to parallelize this, take it out of the critical path, and have like a parallel thread with these applications, checking whether that person exists on the credit bureau, the company is on the corporate register, and so forth. A really nice implementation of that inside of a integrated banking offer is the Metal by NetWest business account. This is an online enabled video ID account opening process, but there's more to this business account. It is nicely integrated with your common accounting software. It helps you structure all the flows in your account for tax preparation. You put an invoice out there with an invoice number. Here comes the payment, and so it immediately matches the receipt with the invoice number, and so you have tracking of your receivables all through your bank account. And once you have all of this data there, it's a really small step forward to think, okay, now we see the invoices coming, we see the receivables, we can already give value to the client ahead of the payment by way of factoring, right? So you can have digital factoring integrated into this. And all of these are incentives for a women-owned business to use the account even more. And there's always the spin-off for the lender, for the bank, that this data that you create is multiple use, right? You now see behavioral patterns, cash flow patterns that you can analyze for risk purposes. You can also use it to target market and segment your client population. So this is the dream environment of everything through the business account and categorizing the flows, making it easier for the women in business to focus on the actual activity and have the accounting, the taxes, the factoring already all built in. And at the same time, it's a big data source for the bank. In that same vein, once you lend into such a client relationship, what do women want? What everybody wants, right? Faster time to yes. So here come the credit conveyor systems, online loan applications, the verifications again to the credit bureau, rating agency, external if we have. All of that directly integrated into a process engine. Of course, you would say, well, that's in our core banking system, that module for $1 million we just bought. That is true, right? But there's a lot of fintech apps that are actually much better at this, more flexible, less hard coding, more parameters that you can set yourself, and it's much faster to define a product and to integrate it into this credit conveyor. And that's where all these other logos are coming from, the blue ring, the Mambu, and TKL, turnkey lender. These are all providers who specialize on this credit conveyor and make it very easy to configure. Here's the other angle in time saving for the hyper busy women in business. That's about the accompanying services, about the training, about the additional content that we want to provide, the coaching. Right? So the lessons learned here are don't think just because the consultant has travel constraints, put all the women in a room for a full day, give them cookies and coffee, and this will be wonderful, right? No, you got to think about access to these events in a woman's very busy day, right? At least you got to provide daycare and break it up into half-day sessions. And better is you go digital actually with the content. And when you develop this content, don't send a guy in a suit again. Women like to learn from successful female role models who are relatable culturally to them, who are similar in terms of background and where they came from, the constraints that they face, and they made it anyway. Right? So that's a powerful role model. But flying in an older guy in a suit again, that's not always culturally appropriate and doesn't amount to a good role model. So the coaching part that is also very integral to the Women in Business program in Turkey. That coaching, that doesn't have to be in person, right? There's a lot of experience with very effective distance coaching, one-on-one, using WhatsApp, using Skype, and we've seen that in the program in Morocco, also by the EBRD, and I'm sure you already have also in Turkey some positive experiences with that. And now the latest thing is really gamification, right? That's not even a word until just very recently, but there's a company out there that we used quite a bit. It's not expensive as a software, Gamisoft. It's all in Russian when you go there, but you can find a English version as well. So this Gamisoft is a platform like a wireframe that you can hang your own content in, but without having to code anything, and it's not very complex at all. And that allows you to turn boring folders of policies and procedures into interactive learning experiences. Or if you want to have an accounting course for women business owners, you can put that in there. So you just hang the content into a configurable wireframe, and then you push play, and people can play this game, can look at the videos, and there's even a competitive element with prizes. Who gets the most points gets a prize or a rebate or a lower interest rate. A lot of possibilities there. Sometimes there's value also in the advice not coming directly from the bank, but being seen as more independent and general, as opposed to just a precursor to a product sale. Okay. That's the case of Smart Purse. That's something that our colleagues from Turkey pointed out to me as a great content provider in financial training, customized for women, right? So that nobody's mansplaining anything there. It is a content on planning your financial future, planning entrepreneurship, what you need to know when you deal with financial institutions. And that's where, of course, you want to have a measure of independence, not just the lenders, financial consultant doing a hard sell on their products. Good. Let's look at the poll results for the first question before we move on. Where do people stand on the continuum, fintech all the way, or we're sticking with our cast iron core banking system to the bitter end? Okay, there is the poll result. Can you also share the answers? Okay. Okay, we'll come back to that in a little bit then. Moving on to mobile money, supply chain, vendor credit, online marketing. Remember the digital financial ecosystem. That's what we're talking about here. And what we hear from women is they're looking to also exploit the whole online metaverse of selling online, buying supplies online, but buy on credit and sell on credit, right? There's a direct financial opportunity here for lenders to facilitate the injection of credit on the buy and the sell side. The best example of such a successful ecosystem that I have seen in banking with fintech is Kaspi Bank in Kazakhstan. We got a little screenshot there, but of course that doesn't do it justice. It all started with mobile money in a society that is very cash driven, very traditional. Just 10 years ago, particularly in the rural areas of the vast country, people would walk around only with big piles of Kazakh tenge, and online money, digital payments, very low adoption. And then all of a sudden, just as we were at our bank thinking about maybe we should do some mobile money, everybody used Kaspi Dengi, Kaspi Money as the mobile money solution. And how that got to that point was with credit priming the pump, dispensing consumer credit, but not as merchant credit, not as an installment loan, but as credit cards, and the vast majority of these credit cards being virtual credit cards with very small limits, but solving the problem that people had on the online business platforms, that at checkout, you had to say, I'll pay in cash when you deliver, or something cumbersome like that. So there, all of a sudden, you had a means of payment and collection when you do online shopping. And that took off like a rocket. And the advantage here is that it is both online and digital, and also available in the physical shop, where everybody has a sticker on their shop door taking Kaspi Red, the Kaspi ecosystem. That means that you can pay in the store with virtual credit cards, or you can use a online, or you can use a deferred payment, meaning 0% interest in 6 installments. That's all paid for, fronted by Kaspi Finance. Oh, I apologize. It's all paid for, fronted by Kaspi Finance. And the interest is effectively paid as a deduction by the vendor, so that you can have campaigns, promotions, all running through this ecosystem. And at the same time, it's also a bank, right? With all the savings, with all the additional financial products that you can tap into in a strictly online format. So that's a really cool success story. Others have been trying, not very successfully, to replicate the success of those online consumer platforms themselves, being the next Amazon.com, being the next Yandex.com. That doesn't work very well because that market is mostly taken. Right? So don't try to beat them by setting up as a bank your own online marketing platform. Just join the existing leading platforms and make sure that your clients can use their virtual credit card and their special offer codes to promote credit sales at checkout using your financial service. And that serves women very well when they're procuring, when they're buying merchandise for their business, office supplies, inputs, as well as when they when they sell on credit and can augment the sales volumes. But that said, there might still be room for some specialty platforms. Surprisingly, there is the success story of Etsy.com, which is for artists, crafters, antique sellers that want to be different from the big Amazon.com, right? And that has taken some gathered some speed. So if you can connect to some of these specialty platforms, maybe around agriculture as well, that would be a place to then go into overdrive with these online credit at checkout offers. Moving on to that third idea in the rural and agricultural space, what can we do for women's financial requirements there? Now, many people think, okay, we got to scale up. It's got to be combines information over 150 acres of a cash crop. That's generally not the paradigm that women farmers are looking for. They'd rather capture more of the value addition in niche products, specialty crops, and in those supply chains for those specialty items. They want to be ethical, fair trade, and have even a kind of a women-centric theme that overlays the whole distribution. That exists as examples in the jojoba extract space. From Namibia, we have a very successful program there that helps women plant jojoba bushes in the desert. Takes 3 years, but they then produce some of the finest jojoba extract oil in the world. And that goes into cosmetics, mostly in Europe. And there you see, from start to finish, you see this as a women-focused specialty fair trade product that has a high affinity at the consumer level. They see right through where this jojoba came from, the happy faces of the producers, and see most of the value of what they buy at a high price. Most of that value not go to middlemen, but to the producers in country. A very similar approach also taken in Morocco on the famous argan oil. That's also a desert tree fruit that's distilled, extracted for oil. Also goes into cosmetics and is highly appreciated and costs thousands for a shipment. So are there things like that in Turkey that women are interested in specializing in? No, here I'm making it up as I go. Maybe some special high quality olive oils. There could be some special medicinal plant extracts. I found something in the region of Hasankeyf that there's medical plant extract business there. Otherwise, essential oils, spices, and so forth could be high value niche products where you don't have to have acres and acres, but it's relatively intense in terms of the production and the processing in the value chain. Those ideas work well with cooperative approaches, which are also a theme in how women like to organize their business. It's a natural to have a cooperative approach to form an association or business linkages, and that is something also where we can support with our business development services. So when we want to inject lending into these kind of activities, that's best done in a way where we have a contract farming, a price assurance kind of approach, where we can go higher up into the value chain and collect from that aggregator that farms out the actual primary production. So in contract farming, we know where the money is coming from, and we can very safely collect from there, and that, of course, brings the cost of this transaction down and makes it more efficient. Here's an example from Turkey of how this actually all is already happening on a mobile platform that now has 150,000 users already active on this platform, and it provides weather data. Okay, everybody it's got weather, but micro weather data on the person's plot, their farm, which will help target the watering, make the fertilizer deployment more effective, and then many other additional data points, including what's provided by Tarla.io, a geospatial information company, satellite pictures that tell you where to apply the fertilizer, when a plant is suffering a pest infestation. So those data points make for smart farming. And now we have also financing opportunities in that, because people are buying inputs and are also arranging offtake through this application, fixing the price through this application, and all of those provide opportunities to have deferred payments on the inputs, provide credit, and also collect against the proceeds of sales and offtake arrangements. Sponsors of this who are already working with İMEÇE are Turkey İş Bankası, and also the commodities, the commodities exchange, TÜRİP, which is, of course, a natural if you're in farming and the scale grows, you want price assurance, price guarantees, you turn to commodities, futures, and other derivatives to provide price protection. And all of that in a future iteration will definitely be built into İMEÇE Mobile. So the point for you is, you don't have to reinvent this, right? This is a fintech that's out there. You can integrate with this instead of trying to replicate this inside of your core banking system, of course. Okay, so here's another poll question that I wanted to throw out there on women-centric financial services. And I want to hear about your philosophy on financial services for women-led businesses. And I'll give you a little bit time here to read it and answer it, and then we'll come back to it. And if we don't have time to come back to it in detail, it'll be in the post-session feedback what people think about how to structure financial services for women. And here's a hint: maybe number 3 might be the correct answer. Good. And moving on to what else can we offer women other than a traditional collateral-based installment loan arrangement? What women want, again, is flexible terms, uncomplicated access, and because they are careful and risk-averse often, even if they had significant real estate collateral, they don't want to put the house, the farm at risk if ever they run into a problem in the business. They lose the farm, they lose the family home. That is something that many women would feel very concerned about. So here comes leasing, factoring, and supply chain finance to the rescue. Leasing, by the way, is also a Islamic finance compliant construct. That may be an additional argument for leasing because it's essentially an installment sale. Leasing is not new in Turkey, right? I wouldn't call it fintech innovation, but doing more with leasing is definitely a way to go deeper into women-owned businesses, particularly in rural areas. I'm thinking of agricultural leasing. I'm thinking of solar leasing. And the same goes for factoring and other supply chain finance approaches where we have a contract arrangement in the supply chain. Factoring is also not new per se, but the challenge is the seamless digital integration of factoring. And there we hear good things about the finance factoring solution from QNB in Turkey. And you can see that once you got the women's business on your business accounts, running most of the transaction not in cash, but in non-cash with mobile access across your platform, right? And then it's also very, very easy to identify the receivables, right? And collect them through this interface while giving value ahead of time to the business. And that's essentially what factoring is all about. And from there, you can also offer additional services around the actual invoicing, right? That will be very much appreciated by business owners. The invoicing, including the collections of unpaid invoices that don't come through within the payment delay that's agreed. So that would be the factoring dream, seamless, digital, full integration into your business account platform. So these products aren't necessarily women-specific, women-centric, right? But they can be repackaged, marketed with the proper messaging that will resonate with women-led businesses. Here's some new ideas that we begin to see in the solar photovoltaic space: pay-as-you-go, pay-per-use equipment leases. So it's still about asset finance and an equipment lease, but it's not a fixed installment in time, but a pay-per-use, pay-as-you-go idea. And that could mean that you pay a small installment for the office equipment, for the photocopier, right? But then beyond that, you pay for the number of copies or printers, printer runs performed. And so it flexibilizes the installment load. You could do that also with a feed-in tariff for solar installations, where you tap into that discretionary payment stream, as opposed to saying, here's your fixed installment for your photovoltaic set. And did you know that there's such a thing as agrivoltaics? It's the blend of solar farms with actual plant farms, as you see on the picture on the right-hand side. And that's the thing, because the solar works better when it's not sitting in a hot parking lot, but when the underside is actually cooled by vegetation. And the vegetation below likes that it is partially shaded and not burning in the direct sunlight, and uses less water, less pesticides when it is partially shaded by your solar installation. So it's a win-win, and plays well with intensive limited space use. And last idea that is born out of credit card flow securitizations that Turkey has always been a pioneer of, is a revenue sharing installment approach, where you know where the money is coming from. It's coming from the online payments for services, or it's coming from the point of sales terminal, and it's coming to your checking account that you run for the business. So instead of saying your installment is 1,000, you can say, we'll take 2% of that cash flow with the minimum of 200. And so when the business is doing well seasonally, you get more of the turnover repaid, and otherwise you just get the minimum installment, just like you would do in any revolving credit kind of scenario, where the repayments are flexible, revenue driven. Okay, moving on. Unless there's some burning questions from the team that you want to play to me, I'm just going to keep on going like a freight train. Women-centric credit risk assessment. Here's the thing. Women are the better credit risk. Right? Every scoring model, every rating model that I've done shows that over and over. Right? Yet women still face challenges accessing credit. Much of that has to do with the collateral focus, and that can be addressed with the guarantees, such as the KGF provides, such as EBRD provides, and the European Union provides. And that's a really great thing. But the problem is deeper. There's a confirmation bias in much of the credit scoring, credit rating system. And that's a little bit surprising, right? Because there's regulation, there's rules that specifically say you may not discriminate based on gender, age, and so forth in any official credit scoring that happens on the credit bureau, for example. But the point is that if you just focus on show me your credit history, and that's the only thing that we're scoring, that leads to a bias in itself. Just like in the olden days, when I applied for my first job, I still had to write on my CV, I had to write my parents' names and occupations, right? And so you could immediately see, he comes from a good home. His father is this, and his mother is a homemaker. That's great, right? And therefore, he will be also a good student. He will also be a good employee. And in terms of artificial intelligence and machine learning, that is true, right? You already have an advantage when you've had credit before, when you come from a big family, right? You have an advantage already out of the gate. So if we base our algorithms on that, that will just confirm this starting advantage and will keep it going, right? So if you want to be gender neutral, you got to have a pro-women bias to overcome this. And how do we get there to not fall into this confirmation bias trap? Number one is we got to broaden the reporting base in credit bureau data. It can't just be the actual credit transactions, because that's where the confirmation bias sits, right? But there might be other positive payment experiences that are not related to credit, but are utility payments, smartphone rentals, and other recurring payment obligations that don't arise from credit. And if you get those reported into the credit bureau as well, then we're beginning to make up that difference. We also should, maybe not on the credit bureau so much, but for sure in the institutions' statistical scoring, we need to score more on alternative behavioral data using the spending and saving patterns. And see, that's why it is so important to have the transactions on our platform, not on the other guy's platform. And the more of the transactions we capture, the more we can see the patterns, and the better we can analyze this behavioral data. We can also, within reason, integrate social and mobile data points. Of course, there's a lot of data confidentiality issues there to consider, but if we can use it in a positive only enhancing way, then that's probably permissible. And there's a lot of experimentation going on there already. And one thing that we've also at the Frankfurt School been actively experimenting with as we are building scorecards for women, scorecards for not just for women in general, but credit scorecards where women overcome the confirmation bias. There we build in psychometric elements. It's kind of like your traditional psychometric or psychology tests where you want to know your character, your disposition, and we're testing for integrity, business drive, entrepreneurial spirit, resilience. Those are the criteria that we're testing for. And guess what? Women do really well on these because they're not impulse buyers. They're not interested in the fancy car right away for their business. They want to build this solid from the ground up, and they're very resilient, very entrepreneurial. So they generally tend to score quite high on psychometric tests. And just a reference here, Etikas is a fintech fintech company that helps specifically look through conventional scoring and rating approaches and the processes around this to highlight bias and vulnerabilities that would disadvantage women in those algorithms. And we do that too. In the Frankfurt School, we just recently had a project with the Microfund for Women in Jordan, where we put into the credit scoring blender, we put in behavioral elements and psychometric elements to allow women who otherwise have a very thin or absent credit file to collect points and make them eligible also for lending. Okay, final main point is integrated insurance. That's a great product, resonates amazingly with women business owners. Women, we already came across that in the psychometric profile, are often risk averse or very smart risk takers, not impulse decision makers. So they're looking for ways to hedge the downside because they know that they're putting not just their future on the line, but also that of their family and their children. So they're very much interested in risk management opportunities. But the problem with traditional insurance is that it is just so costly, right? That half of what you pay in premiums, and particularly the first year or so of what you pay in premiums, all goes towards marketing costs and the friendly insurance representatives who comes to your home and talks you through it. That guy in a suit walks away with the first year of premium payments as a bonus and car allowance. So we want something that is tech-driven, cost-efficient, and works well in the types of businesses that women are active in. So what works are credit life, lump sum, cash benefit policies that cover accident, hospitalization, and funeral expenses. That's something that Alamana in Morocco, a microfinance leader in the country, that they have put in place under the brand name of Taisir. And when you read the thing on the side, you can see that it has all of the success factors that we need in this kind of a compact microinsurance product. It is a cash out fixed sum, right? We don't want to look over 10 pages of receipts and then decide, oh, that's covered, that's not covered. That's very inefficient. You just show us proof of the insured event, be it an accident, a hospitalization, a death. Okay? And here is a fixed sum of cash, and you know best how to deal with this cash in a crisis to cover the essential expenses. And when you set it up like that, the cost is surprisingly low, right? 10 Moroccan dirham, that's not even a euro, right? To a month to have access to a 3,000, 4,000, 5,000 cash benefit. Right? And that's something that most people will look very favorably upon, say 10 for 5,000, amazing. And it is true, right? Because you don't have you don't have the marketing expense in traditional as you would have in traditional insurance, because it's a group policy. All the borrowers of Alamana have exactly access to that service. The premium is built into the financial product. It's not separately collected and tracked for each insured, because that's where the other half of the premium goes, is to check, did this guy pay this month? Send him a letter, you didn't pay this month. So if you don't pay by the 5th, your insurance cover is no longer valid and so forth. This whole administration monster, right? That's where the money goes in insurance. And that can be taken away when you just become an agent for a group policy and you collect it in bulk. It is a cash out based on a simple evidence of an event that has occurred. And also that is done by the bank or by the lender and doesn't have to be sent with notarized copies to the insurance company. And then the insurance company just strictly carries the risk, right? And not all of the administration expense. And that's how you get the costs down. Along those same lines of thinking, we also could use agricultural price insurance, hazard insurance, weather index insurance around the farm and the agricultural production. There also, it's about efficiently delivering that risk-taking to the women-owned business. The price insurance can be provided by the off-taker in a contract farming supply chain kind of setup, or we can provide access to market price insurance using a commodities derivatives exchange. Now, you might be thinking that is a little bit out there for our context. However, if we can be the intermediary, just like we saw at Imechi Mobile, if you can be the intermediary, break down the size of these typical contracts and provide all the education around it and be the broker for this, that could be an approach that provides very cost-efficient price insurance because it's abstract, it's a derivative, and you win if the price is higher than this, you lose when the price is lower than that, or the opposite. That is an efficient way to provide price insurance. And that does not depend on what you would do with the actual harvest later, right? Where a lot of moral hazard would otherwise come in. Weather index insurance works in the same way, actually. It's often a weather index derivative, where you're essentially saying, there's this jar with the precipitation for this area at the weather station. If it is higher than this line of precipitation this year, you win, I lose, otherwise the other way around. So if you're protecting against a drought, right, and the glass is only half full, you get a payout that is pre-agreed. If the glass is full, you don't get your premium back. End of discussion. So that's weather index insurance, where you don't need to send inspectors out to see whether you actually have a drought on your field or not. It is just an abstract bet on the level of water in a measuring cup in a weather station. That works really well. Some consulting and readiness is, of course, required around that. And this is where another Frankfurt School project could come in handy. Frankfurt School manages the Inshu Resilience Solutions Fund on behalf of KfW and other donors, notably the German Ministry of Economic Cooperation, the BMZ. So again, in this whole insurance space, what are the success factors? Is not paying half your money to the guy in the suit who sells you the insurance as an agent. It's about portfolio-wide, group-wide coverage, right? Where you just opt in, or it's already packaged into the product. The premium is collected with the other financial products, with the interest from the account. There's no individual underwriting where you go in, you unfortunately can't help you. None of this, right? No individual risk assessment, because the pool is big enough. If you apply this to all of your clients in a particular product or in a particular region, the pool is large enough to make for an efficient, diversified underwriting. And then if the claims process is simple and doesn't require original documents being sent back and forth and claim deniers going over each point, if the claim process is efficient and you get a fixed cash sum if you have evidence of an event such as a hospitalization, an accident, or a drought, you'd get that fixed cash benefit and no further discussion required. And that makes it cost efficient and very suitable for women entrepreneurs. Good. I want to pause here before I go to that buffer topic that we mentioned, to hear questions, have the discussion, see the feedback of the first two poll questions. So I'm giving the microphone to our colleagues in Turkey to feed me the questions, if you will.
Hello, Dr. Joachim. Actually, so far we do have one question, and it's actually about blockchain. So we can either proceed or it's up to you.
Okay. Well, then I'll go to the blockchain.
Okay.
But the blockchain, I have to warn you, is a topic where time disappears. So I'll try to be brief. So my theme for today is the party is already over, right? The party is driven by cryptocurrency prices in US dollar. So everybody has seen this chart here. Bitcoin goes up, hits the 60,000, 70,000, and then it comes back down. So everybody is watching this, and that's essentially also the summary of this whole attraction. Everybody has a cousin who knows somebody who got rich with crypto. They probably got rich right around here in that first crypto craze 1.0 in 2018, right? If they sold early enough, right? And then surprisingly, it came back for crypto craze 2.0 and 3.0. What drove that craziness is the liquidity during the pandemic, right? Everybody pumped out money, no interest really to be earned on most government bonds, zero savings rates, the stock market being already clinically overbought. So what else can we do with the money? Oh, maybe we should buy crypto. And so crypto became a digital asset that people hold, not to make payments with. Like back in the olden day, in 2017, the talk was, oh, this is the new money, right? Before too long, you will all pay your coffee in the morning with crypto. Right? This is the future. And now people are saying, no, it's too valuable to make coffee purchases. And the transaction fees are actually also too high. They say it's too valuable. It's a digital asset. You hold it as an investment because it will appreciate over time. And it's a great hedge against inflation. That's, of course, completely crazy because there's always more cryptocurrencies. Right? There's now, when I last checked, there were 7,500 cryptocurrencies listed on Coinbase.com. So you can always make more, right? And even the Bitcoin itself already has many variants, many forks. It's Bitcoin Classic, Bitcoin Gold, Bitcoin Cash, Bitfinex. There's already approaching 10 Bitcoin variants. So while that one particular algorithm is limited to 21 million Bitcoins, you can always make more similar sounding blockchains and have them run other coin variants. So problem is that JP Morgan, Goldman Sachs, they don't like to stand by when something is moving as crazy as Bitcoin. And so exchange traded funds have been launched, derivative contracts have been launched on top of this moving monster of Bitcoin, Ether, and other of the more popular coins, because when something moves, it's volatile, and that's where the professionals can scalp you and make money. So my point here is this isn't scarce, right? It has no intrinsic value. It is a Ponzi scheme where prices will keep going up until there's not enough crazy people behind you wanting to buy it. And then it will crash down, and it will crash down all the way to zero in our lifetime because there's no intrinsic value. And you don't even own the crypto mining farms in ice caves in Iceland or in Kazakhstan, people say, well, all the graphics cards that are invested in cryptocurrency mining, yeah, but as a cryptocurrency owner, you don't own even the graphics cards, right? That's somebody else's investment. And that's also once it's been installed. Last year's graphics cards in an ice cave in Finland, you know, not exactly a lot of value there when you have to rip it all apart. So that part, Ponzi scheme, don't do it. It will not end well. However, there is an interest, and I acknowledge that, there's an interest in emerging markets, particularly at a time of crisis, when there are currency restrictions, right? When the idea of an anonymous, secret, digital money replacement, such as crypto, would be attractive. Right? It's kind of like the secret Swiss bank account for the poor people, where if you're a Ukrainian refugee, right, and you have a crypto wallet with a small crypto fortune in it, indeed, that is better than walking around with Ukrainian hryvnia in Poland at this time. I acknowledge that. Right? It would be even better if you just had an account in euro in a European bank and an ATM card, right? And that would be even more practical. But if you don't have access to that, then cryptocurrency would be a way to go. But the question remains, where did you even get the crypto from, right? If you didn't mine it, how were you able to put hryvnia into a crypto wallet? If it's about a war that broke out, probably previously you have the opportunity. Now it is too late. Okay, and then we got this poll question number 3 that asks about your experience level with crypto assets and the blockchain, and I already have a lot of loaded content in those 5 bullet points, where you can find yourself on that spectrum from what's crypto again to I'm a crypto miner. That's what we're interested to gauge here. Good. One last remark here about the blockchain, right? So we said cryptocurrency, don't do it. It's a Ponzi scheme, right? And you can quote me on that. There's more people actually who are beginning to see it that way. That's why the Chinese have outlawed it. That's why the Russians have outlawed it. That's why also US regulators are thinking about beating back the cryptocurrency monster. But now we want to talk about the blockchain, right? My summary of this whole thing is that it is real, right? There is something there, but it's a really small step for mankind. We wouldn't be talking about this at all if, again, your cousin's friend didn't buy a Ferrari with cryptocurrency, right? These two go together because cryptocurrency and blockchain were always mentioned in one sentence together. So somebody gets rich with crypto, so there must be revolutionary blockchain technology that makes it possible. So what is this blockchain technology? It's about a decentralized data model, right? It also used to be called distributed ledger technology. So a decentralized data model where the truth about your account balance, the truth about who owns this property, the truth about the certificate of origin of a product, that truth is not sitting just in one database, maybe even a mean government's database, but it's sitting in many copies of the database all around the world. That's the decentralized data model. But how do you make sure that all the data in all these decentralized databases is exactly identical? That I have a Bitcoin in your copy and I have a Bitcoin in your copy of the Bitcoin database. That's done with cryptographic authentication. And that essentially is the core of the blockchain technology. Cryptographic authentication is done with a hash key, is done with a test key. And the crypto people didn't invent this, right? The hashing, the test keys, if you're bankers, right, you send a Swift message and it says the MT103 is authenticated. That is a way of applying a digital hashing cryptographic algorithm to make sure that the content that you see, the message, has not been altered, right? The beneficiary is the original beneficiary, the amount is the same, and you cut a hash key across these data, and the smallest change in the data, like adding a 0 to the amount, the smallest change in the data will make that the hash key changes. And if you know the public algorithm for calculating the hash, you have the message, you cut the hash across that message that you received. If it gives you a different result than what came with the message, you know that somebody has tampered with it and it's no longer consistent with the message sent. So that's all there is. This is already happening anyway. Anytime you download a software copy, right? Microsoft runs a hash key across it to make sure it's unaltered, it's the original, right? Every time that you communicate over a secure website, you got that little lock in there, they're hash keying, cryptographically authenticating also your content. So that's why I say it's a small step for mankind, and we will not be talking about it unless it's somehow mixed in with this get-rich-quick cryptocurrency stuff. Well, now you say, no, there's more, right? And there's the smart contracts. Smart contracts are like a stack of executable instructions, like a software program that has conditions built in. If money received, then send goods, for example. Or in trade finance, if bill of lading received, goods are on the ship, then release payment. Right? So that has its place to have irrevocable, authenticated, written in stone kind of executable stacks of instructions. So you see this flow chart here. You have contracts, you agree on this, you code it, and then you wait for the events to happen. And when that event happens, order received, then execute both value transfer and the service or the good that needs to be provided or transferred. That's called then the settlement, right? That is easy to do for digital goods that are already in the blockchain or that are on your platform or in a video game. Right? But it's not easy to do this settlement. Here's the car, here's the land, right? It's not easy to do that settlement for things that are physical, right? And here's the thing now, most of us live in the real world, want to consume real goods, want to drive in a real car, and want to plant on real fields as opposed to virtual. Right? So my analysis of where this whole craze, crypto and blockchain came from is the gaming world, right? This big complex virtual reality gaming worlds where you can also buy things, sell things, virtual real estate, virtual cars, virtual girlfriends that you can take out for dinner. And all of that requires a payment, and that's built into that gaming environment. That's where it came from, this whole blockchain crypto craze. And guess what? That's where it's going back. If you look at what's currently happening in terms of initial coin offerings, raising money for new ideas, they're all about crypto trading, crypto investing, and gaming, right? And this is now also where Mark Zuckerberg and Facebook are going, right? The metaverse. When you go into the virtual reality world, you're just sitting with a VR headset in your parents' basement, slurping milkshakes all day while living your world in the metaverse, right? And then crypto and blockchain are for you, right? But if you're like me, I don't like paying to watch other people play video games. I like to live in the real world. And I think most of our women in business customers are very much anchored in the real world, right? So they're not going to go with Mark Zuckerberg into the metaverse, and they're also not particularly interested in accumulating crypto tokens so that they can get the better farm in the...
Yönlendirebilir miyim acaba size bu konuya çok daha dalmadan? Bir iki soru geldi çünkü misafirlerimizden. Onu yönlendirmek isterim arzu ederseniz. Bir katılımcı...
Yes, and I was exactly at the end of my speech here. Sorry.
Süper. Katılımcımız şöyle bir soru yönlendirmiş. Finansal olmayan hizmetler verebilmek için eğitim, koçluk, danışmanlık gibi kadınlarımıza önerebileceğiniz bir fintech var mı? Özellikle bu konularda, finansal olmayan konularda.
Yes, excellent question. I gave 2 pointers on slide 6. Gamisoft, right? It's a wireframe configurable software, not expensive, that you could put training content on and hang videos, either self-developed or outsourced videos and training content into this environment. And it's very light touch programming. It gives you a great experience in terms of interactiveness with the content, videos, questions and answers, and then you score points, you take the test, and depending on your test results, you can also get prizes, and who does it the best, the fastest, whatever. You can collaborate in groups on this and have a competitive spirit, but what often resonates with women there is not just the one-on-one competition, but the team competition, right? Our team versus the other team in solidarity. So Gamisoft really is a type of fintech of which there exist others, I'm sure, that will help you deliver content in an appropriate format, easily approachable for women. And the Smart Purse was exactly an example of content that otherwise you would have to develop yourself about money, about investing, about saving, about borrowing, and what the women perspective on that would be. That's already developed in the Smart Purse platform. You can license some of that content. You can re-engineer some of this content, and many banks have, of course, already content available that they could easily upgrade and put into such a gamified environment.
Çok teşekkür ederim. Bir soru daha aktarmak isterim. Bir konuğumuz tekrar bir soru daha yönlendirmiş. Bu soruda biraz fintech son kullanıcı ürünleri hakkında. Bu fintech son kullanıcı ürünlerinin bankacılıkta kullanımını baktığımız ve karşılaştırdığımızda kadın ve erkeklerin kullandığı uygulamaların dağılımında bir farklılık var mı? Sizin böyle bir gözleminiz var mı acaba?
Okay. I get where you're coming from. So I'm using this slide here as an overview of all the potential apps that we might have in our core banking or on the higher middleware layer, just to give me the keywords. And so the question is, are there preferences between women and men in their behavior of what they would look at more, find more attractive? That's a hard question. Let's start with the insurance products. I think there evidence shows that women are generally more risk averse, prudent risk managers, and interested in providing protection against adverse events. So insurance, if packaged properly, should resonate very well with women. And that, I think, bears out in the actual consumer behavior as well. So that would be my safest bet. Insurance, properly packaged, women would like that more.
Çok teşekkür ederiz cevabınız için. Peki bir soruda şöyle bir soru sormak isterim. Yine bir sorumuz var.
Is there more like on the credit conveyor side, the credit products that women would be interested more? When it comes to the credit products, just thinking through the psychology that we developed, I think women would also there prefer products that are more flexible and mitigate the risk of going into arrears and getting into trouble with excessive credit exposure. That goes well with the psychology of women business managers, that they're generally erring on the side of caution. Slower growth because they're worried about overburdening their business with credit and installments, which is a bit of a trap that many women business fall into, and that because they're so careful, they don't grow fast enough to a size where the scale really provides additional benefit. So if we can design the credit products in a way that they remain flexible and reduce the risk of arrears and negative consequences, then I think you will see women taking up credit more easily. And so not requiring real estate collateral, making their payments flexible, like this revenue sharing idea, those will again resonate very well with the prudent disposition of most women managers.
Evet, çok teşekkür ederiz Sayın Doktor Joachim. Şu an için sorularımızın çoğunu cover etti sunumunuz. Gelecek olan diğer soruları da e-mail yoluyla yanıtlıyor oluruz zaten konuklarımızı. Gerçekleşen bu verimli çalıştığı için size ve katılımcılarımıza çok teşekkür ediyoruz. Sizi aramızda görmek çok büyük keyifti, konuklarımızın da katılımıyla beraber. Sizin ekleyeceğiniz farklı bir şey yoksa webinarımızı da kapatmak istiyoruz efendim.
Okay, I do have something to say.
Okay.
I want to thank you for this opportunity. It was an honor, and I want to emphasize again that I didn't make this all up by myself. I drew heavily on the input from the talented team in Turkey, all women, and they all know what the women want, and I was just the messenger.
Evet, çok teşekkür ediyoruz değerli katkılarınız için tekrar ve katılımınız için. Katılımcılarımıza da bugün bizimle birlikte oldukları için tekrar teşekkür ediyoruz efendim. İyi akşamlar diliyoruz herkese.
Thank you. Pleasure is all mine. And thank you to our sponsors and the support of the EBRD, the EU, KGF, and of course the government of Turkey.
İyi akşamlar tekrar.
Okay. Bye bye now, lieben